Good morning from Europe. It's Monday, April 27, at the beginning of very important and I can say critical week with too many data economic events, geopolitical risk to watch. While central banks will have the major central banks across the Europe from Japan to United States will have the monetary policy meeting and interest rate decision. We have inflation numbers, labor market data, but again, the earnings calendar for the first quarter, the third week of the first quarter of 2026, with the geopolitical risk will be the main market driver. Before going forward and check the week ahead, let's a little bit look at the previous week and see what we had so far. Last week, three central banks had a meeting in China. PBOC hold the rates at 3 and 3.5% with 1 and 5 years loan prime rates unchanged. As so far, they have the supportive policies right now, and the recent economic data shows normal and acceptable level of the growth. So they have no reason for now to change the policies. Then on Wednesday, we have the central banks meeting in Turkey, where CBRT, Central Bank of Republic of Turkey, held the rate at 37%. The main reason is because of inflation. Turkish inflation increased again following the higher energy and oil prices. So after several rates cut, they decided to hold the rate at 37% to see what will happen as the fate of the inflation and then go forward. And finally, on Friday, we had the central bank policy meeting, CBR, or Central Bank of Russia, had a monetary policy meeting and interest rate decision where they cut the rates by 50 basis points from 15% to 14.5%, showing that the central bank in Russia is trying to have the more supportive policies as the inflation, energy inflation is not the case in Russia. We know that the Russians, they have their own oil, so they don't hike the oil prices. That's why the energy inflation that we have in other economies, Russia is not facing with that. So they had a more open, more doors and more rooms to cut the rate as what they did. That's what happened generally with the central banks. But besides that, we had inflation numbers as well in the several economies, including the Canada, including the Japan. And we saw that inflation generally is increasing while PMI numbers, manufacturing activities, service activities, and the composite number for comparing both of them, these PMI numbers show that economic activity generally across the board is falling down. We had only surprise in France in the Eurozone. We saw that the manufacturing PMI slightly increased, while in the United Kingdom also we saw some positive numbers, but more surprise came from the United States, where we had amazing positive surprise numbers for manufacturing, especially increasing from 52.3 to 54, and the service sector as well. Generally, we had amazing growth in United States, sorry. About the United Kingdom, I saw it, inflation, while inflation is increased, retail sales also increased by 1.7% in the United Kingdom, by 0.7% monthly growth, generally showing a little bit better situation. But the most of other economies, I mean, the other UK economies, the last week generally it was positive, but the other economies, including Canada, European countries, they showed that the retail sales is falling down. Looking at the bigger picture, we can say still putting all the data together, and especially when we talk about the UK, I have to say that the inflation also increased while the labor market average income fell. And generally looking at these numbers, we can say that the UK economy is still under pressure, looking at the United States numbers, we can say that the retail sales increasing fine with the Red Book good, with the PMIs both above 50 expansions area, and generally GDP numbers. We can say generally for now still the US economy is still moving way better than other economies. For the week ahead, let's say before going forward, let me update with the geopolitical tensions. The latest update is that Iranians, they gave the latest offer, their final offer to United States last Saturday, if I don't mistake, or Sunday. The offer which is denied it. I mean, the American they didn't accept it. Even though the market is counting on this, you know, this we can say de-escalation, but I don't see any de-escalation here. The escalation is still high, and with ongoing tensions, even though the United States doesn't want to continue the war, and Iranian as well. But United States, I think, is decided made its decision to do the big changes there in the Middle East. There are many reasons to say why. But generally, what we can see there that the geopolitical tensions is still high, even though in a first view everything sounds like under control. Uh, but I think that there are too many risks there, and we have to see soon another shock in the markets if the Iranian they do not agree with the American terms. Iranian they send their terms to the United States. That's why the federal, I say the U.S. President Donald Trump canceled Steve Witkoff and Jared Kushner's flight to Pakistan, to Islamabad, to talk with the Iranian. And they say this, there is nothing new, and it's not what we want. It's not in our interest. So Iranian also they didn't send anyone to Islamabad. The foreign minister went to Islamabad to give this letter and their offers, but it's not this offer was not accepted by Americans. So the negotiations didn't go forward. America says that Donald Trump actually says that Iranian they don't have one clear leadership, and we are waiting for them for them to find their leadership and comes to us with the clear idea and with the clear suggestions. They have our number. They can pick the phone and call directly to us, and we know what to do after that. So but I don't think that the Americans can stay so long. The thing is that with the locket that we have in a Persian Gulf, first by Iranian and then by Americans, now the energy market is under pressure. But at the same time, for Iranian itself, the situation is not going so well. If they cannot export their oil, which is happening right now, the reservoirs will be fulfilled. It's like in the maximum in 1.5 or 2 months, and then they cannot even to produce the oil. Even if they cut the production, they can continue the situation for a maximum of 3 months. The 3 months, Americans they can stay hold, then they can wait. But I don't think that Iranian they can wait 3 months without exporting the oil and not having the money to pay the salaries. As I know, there are many jobs that they didn't get paid. There are many employees that didn't get paid. In a sector, in a private sector, there are many, much more. But even in the government sector, also there were the sectors that they didn't get paid, or even if they get paid very late with the no increasing in the payment, which is supposed to be happen because it's a new year in Iran. I mean, after the new year in Iran, and the market was waiting for new payments. I mean, they were waiting for higher average earnings. But it's the situation. So the geopolitical situation, it sounds like something that waiting for a bigger movement, and there is nothing good happening there. But still, for the market, that's a positive news coming that there is no tensions right now, no war right now. That's why the market they were positive generally. But you can see the cautious there as the VIX is still so high, around 20. So about the earnings, while the last week saw the earnings they were fine, especially with the financial sector. In the week ahead, the earnings will be very important to watch, especially Wednesday, where we have the Alphabet, Amazon, Meta platforms, AstraZeneca, and also the Microsoft. Those numbers, those companies, all of them, just like look at the name, Alphabet and Google, Microsoft, Meta platforms. Looking at these numbers, and all of them, all these three, they were called with one day on Wednesday. During the week, generally, we're gonna have the big the giants, tech giants earnings. Generally, with the earnings that we have, we are slightly positive. That's why the market can still stay positive with the positive earnings that comes up. But what is happening right now, we have to still be very cautious about the geopolitical tensions. Looking at the economic calendar, we can ahead with we talk about the geopolitical tensions, we talk about the earnings, and now it's time to talk about the central banks. The central banks meetings start from Tuesday, from tomorrow, where the Bank of Japan will hold its monetary policy meeting and interest rate decision, and we're expected to see the interest rates unchanged at 0.75%. And then on Wednesday, we're going to have the first Bank of Canada's monetary policy meeting. There is expected to hold the rate at 2.25%. And then we will see that that the Federal Reserve, which started its monetary policy meeting from Tuesday, on Wednesday, they will finish, and we will have the statement, monetary policy statement, and also we'll have the press conference of the Fed Chair Powell. There was also, we are expecting to see the interest rate to be held at 3.75%. And then on Thursday, while the market will have the Bank of Brazil, BCB's central bank meeting, expected to hold the rate at 14.5. About the BCB, I have to say something. The BCBs probably can cut the rate by 25 basis points to 14.50%. But other banks, they has to they support to hold the rates. Like for example, the BOE, look like a few hours later, on Tuesday, they will have to hold they're expected to hold the rate 3.75%. And again, the ECB, the European Central Bank, hold the rates at 2%. And yeah, that's the most important numbers that we're going to have. And then on Friday, the first day of the May, it's going to be the Labor Day. It's holiday in most of economies across the world. Generally, with the central banks meetings in the week ahead, since the geopolitical tensions holding the interest rates, so holding the energy rates higher, and that can affect directly the inflation numbers. That's why we are expecting to see more cautious policies. We don't know how far these geopolitical tensions can go so far. And now, if it's finished now, we can expect that with the oil reserve that the countries they have, they can somehow they come over the situation, they support the situation and solve the situation, solve the concerns, and refill the inventories step by step after opening of Hormuz Strait. But if the tensions goes forward and the Strait of Hormuz can be locked for a longer time, then we have to actually be a little bit more very cautious about the geopolitical risk and also about the inflation risk. So that's why the central banks trying to be more cautious. So besides, unlike just like the Bank of Brazil, the Central Bank of Brazil, which I expect 25 basis point rates cut from 14.75% to 14.50%. The last time they cut the rates by 25 basis points from 50% to 40.75, 14.75. Now we expect again another 25 basis point rates cut. But other banks, they're supposed to hold the rates at the level that they have and hold the interest monetary policies. I mean, with no change in the general and a major monetary policies. Besides that, on Thursday, we're going to have the inflation numbers, personal income and expectations, personal income and spending, and personal inflation numbers, PC price index, and core PC price index from United States, which will be very, very important. That gonna cover the March numbers. The war started already in that period. That's why we're expecting to see a little bit higher prices for personal spendings. That's what's happening and what we're expecting to see. The most important or the main market movers in the week ahead so will be the geopolitical tensions, earnings, and also central banks meetings. Looking at the charts and looking at the numbers, we can see that if you go to the stock markets, you can see the Dow Jones, S&P, and Nasdaq, which were positive last week. In the futures, in the future market, you can see that the US, I mean, in the Dow Jones future actually is losing by 0.2% today so far. S&P 500 is down by 0.1%, and the Nasdaq is trading flat. While in the Asian market also we can see the same just like mixed numbers. While in Australia, ASX it's losing by 0.3%. In Nikkei in Japan and Kospi in South Korea, they're increasing by 1.4 and 1.9%. Showing that generally what we can expect, we can understand is that the indices with the tech and AI, more tech and AI based stocks, they are positive. They have a positive reaction to the technology based companies. But the more you can say industrial-based stocks or industrial-based indices, they are under pressure with the Dow Jones in United States, with the ASX in Australia, with the China 50, and these industrial-based companies with Nifty 50 also. These industrial-based companies, they are under pressure because mostly industry-based stocks are under pressure. Generally looking at the market, which if you look at the bigger picture, we are still positive. And mostly it's becomes by supported or it's supported by AI-based and technology-based companies in a bigger picture. But in the short term, you have to be a little bit more cautious. But I do see the markets, again, the natural slight positive if we don't see risk this escalation and the tensions are increasing again. As long as we have a positive news or national news from the Iran war, we can say, okay, the market can be more cautious. But since as soon as the markets, this geopolitical tensions increase and the market started paying attention to these geopolitical tensions again, then we can say, okay, now it's time to be slightly wait a little bit more and maybe even to sell the stocks. The same situation we have in other markets. In a commodity market, you can see the gold price is slightly down by almost 2.3% to $4,725, while the silver price is losing by almost 1% down to $75 right now. Brent oil is trading around $101, while the WTI is trading around $96.20. Natural gas is down under $2.70. It's very interesting. Generally, the commodities market is showing that putting more credit for the higher geopolitical tensions, what we can see here. That's why you can see in the bond market that US 10 years bond yields again increasing after just reaching to 4.33% for 10 years bond yields and down to 4.32, and now again is 4.327 or 32.5 or 4.327%. That's a little bit slightly more, it's like 0.4% higher than the recent low. Generally, then what we can see here that the market is expecting, I mean, markets since the geopolitical risk premium is slightly higher. In the cryptocurrency market also, you can see Bitcoin gained down under 78,000 while it was almost $79,000 in a weekend. Now the same situation with the Ethereum, and generally the market now is counting on the more geopolitical tensions than any other thing. We saw in the cryptocurrency market that generally in the recent days and actually in the recent weeks, Bitcoin is reacting to the geopolitical news and just like main economic data much more than reacting to the directly news that is coming from the cryptocurrency market. So geopolitical, especially right now, is moving more than anything else, moving the cryptocurrency market more than anything else. This is the situation. So in a bigger picture, I can see the stock markets, natural, slightly positive. Cryptocurrency market is the same, natural, slightly positive. Bitcoin for the gold and silver, even if they lose in the short term, I'm still positive about the bull, positive and a buy for the gold and silver prices. And about the oil, I don't think that it can raise so much higher than these levels, unless if we have Unless if we have very big geopolitical changes there and the tensions increase rapidly. Otherwise, the situation is in this way that I mentioned. That's what's happened and what we're expecting to see in the markets today and in a week ahead. Hope it was useful for you. Talk to you again very soon in the next days. Have a good week ahead and have a good day. Bye bye.